Gentlemen, welcome back to MGTOW Money. Today's topic, which you can learn from the $50,000 tax bill. Of course, I want to sincerely thank the ongoing investment support from the Patreon investors in this channel. Chad, welcome to the MGTOW Money Army. Men, become a Patreon investor in this channel. See the video description today. Let's get on with it. Of course, in 15 days or so, men, at least for Americans, you're going to need to be filing your taxes. April 17th is the tax due date this year. Today's topic came straight out of Reddit. I'm going to include a link to a Reddit post in the description where a poster describes their situation, and I'm going to give a brief summary. They purchased Bitcoin in early 2017, putting in approximately $7,000. It, of course, had a huge run-up last year in 2017 and topped at about $120,000. So from $7,000 to $120,000. They chose, however, this is important, not to simply cash out, not to simply put the money into USD, but instead did an exchange. They took their $120,000 of Bitcoin and rolled it, if you will, exchange it into some other alternative cryptocurrencies. What this created, gentlemen, what this exchange created, this is very important, write this down, men, this created a taxable event. So that's one thing you need to be aware of. We're going to get into this more in details. But furthermore, you also need to be aware of, this person posted, and this is a couple of weeks ago, that the value of those alternative cryptocurrencies that at one point were approximately $120,000, their value as of 2 weeks ago was $30,000. Yes, so they had approximately $120,000 in value in mid-December. A few months later, they're down to 30, and it's actually less today as we're a couple of weeks later and the crypto market has continued to decline. Now, what can you learn from this, men? Because there are some serious lessons that you, all of us, can take from this. One, obviously, I guess this person wasn't listening to this channel, because if they were, they would have learned a few things. Furthermore, I'm going to include a link I did several videos ago to a discussion of reducing your tax burden, etc. So, and this applies to all men. Two, I, of course, have encouraged numerous times, move to a state that has no state income tax. If you're an American, there are 7 states within the 50 states that you can move to that do not have a state income tax. This particular person references that they're in the state of California. The California state income tax could be as high as 13%. So needless to say, simply by living in the state of California, this person is going to have to be paying thousands of dollars in taxes for the privilege of doing that. 3, this is where it gets extremely important. You need to start planning ahead anytime you sell an asset, whether that be stocks, bonds, cryptos, etc. What I mean by planning ahead, let me be explicit, you need to look at the calendar. You need to think that you want to hold an asset before you sell it for at least 12 months, for at least 365 days. The reason why I'm emphasizing that is because if you hold it less than 365 days, if you hold it less than 12 months, you will pay what's called a short-term capital gains tax. That is what has happened to this person in Reddit, that they are paying a short-term capital gains tax. If instead, and by the way, the short-term capital gains could be as high as 39.6% on federal alone. In contrast, if you are doing a long-term capital gain and you've held it for more than 1 year, the maximum tax you will pay, maximum, is 20% and could be as low as 0. In other words, you could end up potentially paying 0 long-term capital gains depending upon your tax bracket. 2, plan ahead how you're going to pay for your capital gains. In other words, men, you need to budget ahead. You need to think ahead. How am I going to afford this capital gains tax that is going to come out from nowhere? Inevitably, you're going to forget about it. Inevitably, I saw this happen, by the way, many years ago in the late 1999s, 2000s. Many people were getting stock options, in particular if you were working at technology companies, etc. You got these stock options, they vested, you sold them, you took the cash off the table, etc. And you ended up with this $20,000, $30,000, $50,000 tax bill. What? I didn't know that was coming. Yes, that's what happens when you when you take these stock options and you roll them out and then you blow all the money and you haven't budgeted any money. So again, you need to plan ahead. You need to budget ahead. 3, you need to be aware that you can carry losses forward in future taxable years up to $3,000. This is especially applicable for this particular person where they're talking about they've now got this tremendous paper loss. If they chose to sell now, of course, at least they could carry forward those losses. And again, only $3,000 USD per year for future years that you can use to offset against capital gains, or it can be against your ordinary income. It's just an idea. Some of this gets rather complicated, but that's just something that you need to be aware of, that you shouldn't just forget, hey, I took a loss on that stock, bond, whatever, some years ago. You can carry those losses forward. Lastly, this is most importantly, listen up, crypto investors. You need to be keeping careful records. You need to be keeping track of all your trades, all your exchanges, anything that you're doing. Unlike a traditional stock, bond broker, a bank, etc., you of course are not going to get a 1099 from your exchange. You're not going to get some sort of statement. You're not going to have some sort of record of transactions you've done. It is absolutely critical that you notate the date, the amount, etc. of all your transactions. Men, quick summary. Before some of you start commenting that the IRS is never going to know, as one commenter said many videos ago that they had something figured out. Okay, good. You go with that, buddy. The point being is that Coinbase, which is one of the largest exchanges in the world, largest wallet holders in the world, has recently turned over the account information to the American Internal Revenue Service of the account information of over 12,000 Americans. And I subsequently think we're going to see that happen a lot more from a lot of other exchanges. So you can decide whether you want to report this information to the IRS or not. I, of course, would encourage you to do so. In addition, before you're selling anything, you're going to start looking at the calendar. Stocks, bonds, cryptos, whatever it might be. Remember, you're shooting to hold that particular asset for at least 365 days a year. Ideally, again, you want to achieve the 12-month holding period so you can get a long-term capital gains rate. 2, you're going to budget ahead to pay taxes on the capital gains that you might get. So in other words, don't just blow all the money that you get from the capital gain. Put some money aside. Be expecting that, hey, at some point in the future, I am going to have to pay some sort of capital gain. 3, don't forget your losses that you might have had from prior years. Again, this applies to everything. Stocks, bonds, cryptos, etc. You can carry forward year after year after year after year into the future those losses and use them to offset, hopefully, future potential capital gains. Lastly, men, you've got to track everything with cryptos. It's simple as that. Record keeping is going to be absolutely critical for you that are investing in cryptos. And in particular, if you're heavily invested in cryptos and doing a lot of exchanges between them. Men, as always, if you found this helpful, hit the like button. John Galt, out.